How are you guys? Welcome back to the channel. So in this video, I'll be talking about a specific pattern that I've noticed. Before I was not taking them, but after backtesting them, I decided to be taking them and I've noticed they are profitable. There are two trades that I've took this week, which look exactly like the pattern that I'll be showing you today. So the pattern is a continuation pattern which looks like a flat flag. As you can see on the diagrams that I've drawn here, it normally is come down. It happens both in the bearish and bullish market. In the bullish market, it will be just the opposite of this. The examples that I've given here, they are for bearish market. The first one, as you can see here, the market normally comes down and then forms a smaller flag and then impulse down a little, and then it will correct coming back to the previous correction, and then it might give you two touches or three touches like this one: first touch, second touch, and the third touch. And sometimes it might give you two touches below here like these ones, two touches like these ones down here, and sometimes it only gives you one touch at the bottom and then corrects back up to the previous correction, and then it impulses down, and sometimes it never gets to the first impulse exactly, forming going, it will not reach to that exact area. It might go up correctively. You can just draw a trend line on that area and enter the trade after the break on the trend line. So I'll show you on the markets the trade that I've taken this week, like here on Euro Japanese yen. As you can see, the market impulse down and then it was forming a bigger correction, which is a flag. So I managed to take one trade here on this specific structure. As you can see, the market touched it the first time, it formed a correction, it impulsed down and then moved back to that high, and then it impulsed back down again, and then the whole of last week it corrected, going back to that area. And on Monday when the market opened, it was too early for me. I didn't enter that trade there with a risk entry. So when I woke up and did my analysis, if we go down to the 15 minutes, I entered the trade from here, and it corrected for a few hours before impulsing down, and I managed to move my stop loss to break even. At the moment, I've locked in 2% profit. I'm hoping for the market to reach down here. If it doesn't reach down here and it trickles back up, it will take me out at 2% profit. I'll show you another example on the gold US dollar pair. As you can see, gold formed a double top up here. It formed the double top and then it impulsed down, and if we go down to the 15 minutes, you can see that it formed just a similar structure on the 15 minutes as the one that I had shown you earlier. It touched that structure, it touched that trend line two times, three times at the top and two times at the bottom, and then it impulsed down. There's another trade that I've taken today on the same pair. My stop loss, moved my stop loss to 0.5% because I'm about to break to get away from my trading desk, and I have fears that it might trickle up back again and take me out. It might decide to form a bigger structure. That's why I've moved my stop loss here. As you can see on this pair, on the gold pair, it touched this trend line first time, second time, and on the third time I entered with this big bearish candle here with the risk entry. I was I was waiting for it to reach down here to this trend line for me to move my stop loss to break even. Since it is late, it's in about 2 hours 30 minutes the market will be closed. The New York session will be closed, and I fear that the spreads might take me out, so that's why I've moved my stop loss to 0.5%. So I'll show you another pair. There was another one on euro dollar. It happened last week. As you can see on this pair, it was moving to this double top here correctively. I didn't manage to enter this trade because it wasn't convincing enough for me. But if we go down to the 15 minutes, you can see that it corrected a little and then moved down correctively, and then it moved back up to that trend line, touched it, and impulse down. I'll show you another example on Australian dollar against the Canadian dollar. This one also I didn't enter because there was another trade which I entered from this area down here, and I didn't want to add more position to it. As you can see, the market had approached this double top area correctively, and then it started trickling down correctively, but I had entered from this area, and then it moved up to this area. When it was approaching that area, it started correcting, and then it impulsed down. On this specific one, it only gave us one touch down here, just like the example that I've shown you guys. So guys, that has been our video for today. If this is something that you'll be interested in, you can backtest it and try and implement it on your trading setups. Thank you guys for watching. If there is any specific video you would like me to talk about market structure, you can ask on the comment section. I'll be more than willing to make a video about it. Thank you for watching. Please subscribe and like the video and recommend other people to these videos. Thank you.